Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock. In this video, we will be analyzing 3 articles, to where the first one is titled PLTR Stock Alert. Palantir scores new work with the Department of Defense, which is fantastic news for Palantir stock investors because this is going to add to their overall revenues and hopefully reflect in a future earnings report. Speaking of earnings reports, we will also talk about whether or not you should buy, sell, or hold Palantir Technologies as their earnings report approaches on August 7th. So we will be analyzing an article by Morningstar, which is a very respected financial institution, pertaining to if they think that this is a good company to hold before earnings report, after the earnings report, and what their general view is on this overall company. And then I've mentioned this in a previous video that a very prominent analyst named Daniel Ives says that Palantir is one of the best AI stocks to buy right now. And since artificial intelligence stocks is the talk of the town right now, clearly Palantir Technologies' share price is going even higher, and their overall earnings catalyst is also causing the overall share price to increase. So we will be dissecting exactly why he increased his overall price target. So for more videos on Palantir Technologies, remember to go and annihilate that like button, comment your thoughts down below, subscribe if you are new, don't forget to become a member of this channel to support me personally for as little as 99 cents, but if you can't afford 99 cents per month, don't worry. By subscribing, you're going to get this content for absolutely free. And with that being said, I say let's dive right into today's stories. By now you know that Palantir Technologies is a big data and analytics company which serves both commercial enterprises as well as government agencies, and clearly they have a special love for artificial intelligence. Right now the PLTR stock price trades for around $20 per share, while very bearish analysts believe this company is worth around $5 and more bullish analysts believe the company is worth $25. But now I want to talk about their recent contract that they landed with the Pentagon regarding the Department of Defense. So Palantir Technologies, ticker symbol PLTR, is in the news right now because they have been selected by the Pentagon to enhance the coordination between the Department of Defense and other companies which utilize the 3450 and 3550 megahertz spectrum band. So the company didn't disclose how much revenue they actually got for being selected by the Pentagon. However, eventually this will impact their overall earnings. So we're going to find out one way or another. Palantir's software is going to make sharing the spectrum more efficient while also being able to mediate between telecom firms' implementations of 5G technologies. And Palantir is specifically prepared to do just that. So this is very good. The reason why I think Palantir was picked is because they were one of the only companies that actually had the technological data analysis tools to do this properly. However, for those of you who are pouring into SoFi Technologies right now by buying at around $20 per share, you should consider how expensive this company actually is. For instance, their PE ratio, also known as their price to earnings ratio, on a forward basis is 90, and their trailing price to sales ratio, or PS multiple, is 21. To put this into perspective, ideally we would want these substantially lower. We would want their PS ratio, in my opinion, to be around 10, and we would want their PE ratio to be probably around no more than 50, especially a forward PE ratio. So clearly these metrics are very high according to these accounting ratios. But at the same time, some people are arguing that because of their overall growth rate, this allows them to trade at higher accounting ratios, which is true in one sense because if their overall compounding annual growth rates for their revenues and earnings were 30% or higher, I could understand the justification of these higher accounting ratios. But since they are not anticipated to bring in over a 30% compounding annual growth rate, or CAGR, for specifically their revenue, I don't think it justifies their current PS ratio, which is why we're going to move on to Morningstar, who's going to give their opinion on their overall fair value estimate and whether or not Palantir is a buy, sell, or holding opportunity right now after their huge rally up to $20 per share. To start off, clearly they have a fair value estimate for Palantir's PLTR stock of $9, and they give it a 1-star rating. And although this may sound odd to you, I would encourage you to go to the description, click on this source, and read this article for yourself because they have phenomenal evidence for why it is rated like this. However, I personally disagree with them. I think Palantir Technologies is worth between $12 to $15 right now, and I would give them a 4 out of 5 stars. The article also tells us what to look for on their upcoming earnings report report, which will be on Monday, August 7th. So we would want to look at billings. Strong billings acceleration associated with machine learning and artificial intelligence is going to act as a phenomenal tailwind, thus inflating the overall share price even higher. We also want to pay attention to how many customers they added over the particular quarter and how this is positively impacting their overall revenues. And then lastly, their net retention expansion, which is going to measure how customers are expanding the usage of the firm's overall products and services. And clearly, we're going to want to pay attention to their revenue and their earnings per share. But these other 3 bullet points are definitely something that we should keep our eye on. But don't worry, I'm going to do a full analysis on Palantir's earnings on Monday. So what's up with this odd 1-star rating? Because for me, I disagree with Morningstar. Even though I do think they have good evidence for their position, I don't think that it deserves 1 star. They forecast that Palantir will grow at a CAGR in regards to the revenue at around 22.5%, and that is a compounding annual growth rate, and they believe that they are going to achieve this over the next 5 years. And on the surface, this is actually very bullish. This is great news. 22.5% for a CAGR is very impressive. However, it's not enough to justify their current evaluation, and I think that's where the problem truly comes in. They also believe that this top-of-the-line growth is going to be driven by commercial clients being landed as they pull away from more of their government agency contracts. And I've been saying that literally for years, that Palantir is going to focus more on their commercial side rather than their government segment, because over the long term, that is going to be their better revenue source. But it gets even better because Morningstar believes that Palantir has a great long-run growth trajectory, meaning that they could be a phenomenal long-term investment, and that's exactly what I am. I am a long-term investor. I identified Palantir Technologies very early on, and I think investors should hold this company over the long term. The reason I don't give a buy rating or a sell rating to Palantir Technologies before their earnings report is because I don't want to use short-term earnings reports or short-term news to make investment decisions. I want to do fundamental analysis about where this company is going to be in the future, and if the future share price is going to be substantially higher than the current price, then I'll start to nibble at the company. However, if the company drops in their overall share price and I get a better buying opportunity, that's when I buy. I don't buy after surges, because then I'm just paying for the company at a higher price point, and that is not good for me, especially being a long-term investor. So here essentially is the bullish case versus the bearish case. The bulls, or people who believe in Palantir over the long term, said that there is a strong tailwind, which is good. Tailwinds are good, headwinds are bad, in the overall AI and ML market, referring to artificial intelligence and machine learning. And this is going to invigorate overall investors to continuously invest into AI and ML companies such as Palantir. On top of that, Palantir also came out with their AIP platform, which is specifically for artificial intelligence, even though all of their platforms honestly run off of artificial intelligence, or at least use artificial intelligence in one way or another, and this is going to lead to greater revenues. Lastly, they're anticipated to land substantially more commercial clients, leading to higher bottom and top of the line estimates for earnings reports going forward. So overall, it seems that Palantir has a phenomenal growth catalyst cut out for itself in regards to both of their segments. Now, the bears, or the negative naysayers and critics of this company, say by not selling to other countries or companies that are antithetical to Palantir's mission and cultural values, this restricts their growth. So what are they saying here? Well, to understand this, you need to know that Palantir does not do business with anyone who is not the United States or a United States ally, and this lowers their overall market. However, for me, that's exactly why I like Palantir Technologies. I am invested into them because they are not selling data to enemies, adversaries, or foreign companies that are not already a US ally. I like how they only do business with the United States and US allies, and I think this is very admirable of them to do. However, it does impact their overall addressable market in that regard. And then the bears also highlight that Palantir's executive team have made questionable strategic decisions in the past, such as their overall Foundry for Builders program, investing into other assets due to black swan events, but overall, I don't think this is enough to say that investors shouldn't buy into the company. But what shocked everyone, and this is one of the reasons why the company surged up to $20, because not only did they land a new contract with the Pentagon, which was huge, And not only are they anticipated to have a phenomenal earnings report on August 7th, but as you've probably heard, Daniel Ives, who is a very well-respected analyst, increased his price target to $25. And I'm sure you've heard that already, but now we're going to talk about exactly why he increased his overall price target and gave Palantir a buy rating. So investors are really high on enthusiasm right now because this means that Palantir could increase by a substantial margin from its current price. And after giving this overall price target for Palantir, Daniel Ives himself, the analyst who gave this price target, went on CNBC for an interview where he laid out his bull case. And he said there's a golden path right now for Palantir to monetize what we view as a potential $1 trillion market opportunity. And investors still have not recognized what this golden use could be. And clearly he's referring to artificial intelligence and machine learning. On top of that, we know that Palantir is not just a glorified consulting company. They have done work with the Pentagon, the CIA, the FBI, the NSA, which is the National Security Agency, and many other government agencies, as well as the Department of Defense. So it's not like this is some random dud meme stock. This is a company with immense potential. However, this is what I liked what Daniel Ives said. He says that for their enterprise business, they will truly be a force to be reckoned with because there's no better reference than Palantir landing top secret work with the government, because a lot of government enterprises and businesses and organizations are worried about data security and data breaches. But because Palantir is already being used with super top secret sensitive information and they've never had a data breach, this can give high-end enterprises confidence to do business with Palantir. Daniel Ives also anticipates that on the commercial side of things, companies will allocate around 8 to 10% of their future budget next year to spend on artificial intelligence and optimization. So this just adds to the overall bullish case. But again, the company is trading at a very high premium right now, so be careful. If you're trying to get into this company right now, I would definitely try to dollar cost average instead of lump sum your way into this company, because the share price is just too high, in my personal opinion, for an investment right now. Now, don't get me wrong, the company could still increase after earnings. However, stocks don't just go up. It's only a matter of time before we see some sort of pullback, which will present a buying opportunity for investors. So I've been a fan of Palantir for a very long time. I own Palantir. However, I practice proper risk management by keeping less than a 5% initial portfolio allocation in this particular company. But overall, I am very excited to see what they're going to bring in on August 7th for their earnings report. So remember to go and annihilate that like button. Comment your thoughts down below on how high you think Palantir stock will go after their earnings report, or if you think it's going to fall after their earnings report. Go ahead and subscribe so you can stay tuned for that analysis when it comes out. And with that being said, I will see you in the next YT video.